Hi everyone, this is Tim Melvin of the Tim Melvin Deep Value Report, and I want to take a minute this afternoon to talk to you about the new monthly product that we've come out called the Bottom Decile Report. Now, a friend of mine pointed out last night that not everybody is a geek that sits around reading academic papers on the stock market like I am, so they might not be familiar with the concept of the bottom decile. So let me tell you what this is. When academics sit down and they study the market, they tend to break the market into groups of 10 based on whatever valuation metric that they're studying at that time, and they call these deciles. The bottom decile that we deal with is the lowest 10% of all stocks in the market as ranked by price to tangible book value. That's the metric that we found over the years that has produced the steadiest and highest long-term rates of return. In fact, Tobias Carlisle at Greenback.com did a study not long ago, and he showed that if you confined your world to that bottom 10% of stocks as ranked by price to book value, and you equally weighted all the stocks in the portfolio, over the last 50 years or so, your rate of return has compounded at about 20% a year. That's pretty fantastic, and it's consistent with what guys like Walter Schloss have found in their practice, where he earned about 20% a year over a 50-year period just by buying stocks that traded for less than book value. So this report looks at that bottom 10% of the market as ranked by price to book value, and then we're going to look for stocks that have other characteristics. We're going to try to help you separate those that might be over-levered companies going out of business, or what I call the buggy whip stocks, who are just in a business that's no longer relevant or practical and are probably going to disappear for the world. We're going to look for the stocks that have the characteristics to do what I call survive long enough to thrive, to recover once again. For example, in this inaugural issue that just came out, we looked at stocks traded in that bottom 10% where it's ranked by lowest price to book value, and we looked for stocks that had high Piotrowski F scores, because that's been proven to be a great determiner of future performance. We looked at stocks and gave lists of stocks that have high Altman Z scores, indicating that they have rock solid balance sheets and have the financial strength to carry on, as it were. We looked for those super cheap stocks that have high dividend yields, that have seen recent insider buying. We looked for stocks in the decile that also qualified as what we call net current asset value stocks. That's a method of picking stocks where you're basically buying companies for less than their cash liquidation value, developed by Ben Graham many, many years ago, and has been extraordinarily successful. In the future, we're going to add some things to that. There's lots of different ways to look at the market. We'll probably include all of those each and every month, but we might also look at things like stocks that have high profitability compared to total assets. Professor Robert Novi Marks at Rochester University found that that was a market-beating approach to buying stocks that trade cheap based on book value and also have this high profitability ratio. We might look at things like bottom decile stocks with high returns on equity or low prices to free cash flow. There'll be all kinds of information every month coming right to your desk via your inbox, of course, that help you find those potentially huge winners in that bottom 10% of stocks as ranked by price to book value. Every quarter, I'm also just going to take the time to wade through all the 13F filings by the leading money managers and hedge fund guys to find out which one of these stocks, these super cheap stocks, are being bought by the leading hedge fund and mutual fund managers, and which ones are being bought up in activist portfolio and might see pressure to unlock shareholder value in the very near future. So all of this is going to be in the report each and every month. So, can you do this yourself? Yes. Over the course of the year, you'll spend hundreds of hours and thousands of dollars to replicate all the information that we're going to deliver to you every month. Now, our normal price is going to be $99 a year, but the marketing guys and I came to kind of an understanding. They don't get to give it away for free, and I'll discount it by more than a penny. For the introductory period, which lasts till October 1st, okay, the end of the month, we're going to knock 25% off the price. You can get it for just $74.25 and have all this information and all these potentially, literally hundreds of potentially world-beating stocks delivered right to your inbox each and every month. I think it's a very cool new service. I think you'll get a tremendous amount of value out of it. It's going to save you a ton of money, a ton of time, and I hope you take the time to look into it further, because I think it could be an incredibly important resource for the long-term value-oriented investor out there. Anyway, thanks for your time and have a great weekend, folks.